All right, traders, it is the 11th of July, 2017. My name is Jameson. We are looking at a daily vertical bar chart of the S&P here. So yes, we do have a rounded top that's bearish. We do have an up thrust here that's bearish. We do have some structure that's very distributive. We have a preliminary supply. We have a we'll call this preliminary supply, buying climax, automatic reaction, secondary test. Here's our up thrust after distribution, or UTAD. We kind of back test, we try here, we then break down. We could say this is a sign of weakness, but this is not closed below support. But I guess we do close below the automatic reaction, so we can consider that a sign of weakness. And then this lower high could be a last point of supply, and this could be our sign of weakness, and then another last point of supply, which would then suggest that we're marking down. This is a markdown inside the range. Now we're looking for a markdown outside the range. I discussed in a couple other videos that I think that it's difficult in the context because in the context of viewing this as a distributive process, because we have a sign of weakness related to the automatic reaction, to this base of support, but we have not lost this key area, the preliminary supply. And I discussed that the challenge is that this section here, there really wasn't a lot of supply, so it's kind of a false preliminary supply. So it's difficult to map where exactly a true sign of weakness is that would validate a distributive process, because in the meantime, again, it looks like we're just confirming this trading range, right? We're confirming this prior level of resistance as support. You know, we broke out of this trading range and we immediately trade into the upper trend line of this bullish ascending channel. We're not overbought, but from a trading perspective, longs are buying in the resistance. So we're trading laterally to work off those overbought conditions. And you can see that every time it dips, it's actually being bought. And you can't see it here, but if you could, you would see that the 50-day simple moving average is here, and it's being bought every time it hits. What I would say is that this is a up thrust that's very bearish, but more recently, as far as data that we have, this was a very bearish session that happened here, and there was no downward follow through. It immediately reversed higher. We attempted to test it again today, and we closed off lows. Those are bullish observations. Additionally, it looks like that we're actually consolidating long enough that the angle of decline now has actually been violated. We could draw a line through the top of this this little flag that's this bearish descending channel that's kind of here, and we're starting to trade outside of that. We may be in the process of confirming this level of resistance as support. I think from a trading perspective, we'd obviously like to buy along the lower trend line. I think we have another day or so, and that actually would put us a little closer to that actual trend line. We may actually find some support and then rally higher up into those previous upper objectives that I discussed here. So if we do see a breakout, our long targets are 245, 247, 252, and 254. So we have 1, 2, 3, 4, 5. So we have 5 points in this horizontal consolidation, one box reversal, one box size. So if I take that and just add it to the low end of the range and then the consolidation, that's how I achieved these two targets here. I did the same thing for this longer one. I just counted the horizontal count that's present, and then I added it to the lowest price in that price range, and then I added it to the consolidation of that price range, 242, and that gives us the range here between 252 254. Now, if I'm wrong and this isn't bullish reabsorption and it actually is distribution, you can just take these price targets and flip them upside down. So we have a $3 move, this is a $5 move, we have a $10 move and a $12 move. So if you just take those and subtract that from 242 or then 244, that would give you some downside targets. Now those downside targets relative to the bullish ascending channel, that would obviously put us below. If we're at 242, that would put us at 237, down through here. Essentially all these targets would put us back here in this trend range. That'd be pretty bearish. So that's how I use the price projections. Now, I guess another observation is that if we look, supply is actually contracting. Lots of supply, less, and even less. Now, demand's contracting. There's not as much participation. We obviously have some Fed and FOMC data that's coming out here, the testimonies, which is why we're kind of fading the rallies and then buying the dips that are occurring. Now, if we look at This is a 60-minute chart of ES. I showed this chart previously. These are all the big block trades here. These are very large. I think these are 15,000 block trades, 15,000 contracts or greater. So you can see that there's a consolidation through this range here, and the fact that we've rejected it, we can say that this is distributive. But now we can actually see that there's some big trades off lows. So we actually seeing some buying here. Now, if you look at the cumulative delta had been declining. Now it's kind of stalling. And today, actually, we saw a little bit of dip buying that's present. So I think we're bearish. Honestly, we're bullish above this zone. We're bearish below this zone. But we're bracketing between this level. I think that we're going to rally back up and retest this level, right? We have to confirm this as resistance. We've done so a couple times. But just as I'm doing with my copper case study, I'm trying to correlate these key areas of interest with the footprint charts. And as I scan through the footprint charts, there's an incomplete auction that's present on each of these upper shadows that are present. So on the 3rd and then on the 5th of July, there's still demand at this level when we're looking at the bid-ask profile. So that would imply that we would actually rally higher, and we'd have to test this area to make sure there's no more demand before we break back down. So I think we will rally today or tomorrow or the next day into this zone. And we'll, obviously learn more then. But in the meantime, like it's just, this is very difficult. It does look distributive. So in the meantime here, we can flip my words against me too, right? So this looks like we're confirming this level of resistance as support. If we look at the cluster of sessions that are occurring here, it looks like we're seeing some bullish absorption. Well, we could potentially argue that we're seeing some bearish absorption that's present here, right? Bearish absorption of demand. Here's a level of support, and we have been unable to regain this level of support. This support has been resistance, and absorption is a process. It doesn't occur in a session or two. So what we have here is we have a big attempt to break this level. We have another attempt to break this level of resistance, and another attempt to break that level of resistance. If we can't get above 242.5, my bullish absorption and bullish thesis moving forward is not, it's invalidated. This is bearish absorption, and that would put us into the lower trend line and potentially result in us flipping those upper price objectives back into this trading range as present.